So earnings came in, and we knew there was a lack in margins. However, it wasn't as bad as the media puts it out to be. Of course, right now they're milking it. We'll talk about earnings today, and I want to talk a little bit about some exciting news. I made a video about it a few months ago, so we'll talk about Tesla's new location. So stay tuned. Tesla's Q4 and fiscal year 2023 earnings call comes on the heels of the company's fourth quarter and full year of 2023 update letter. Similar to past quarters, Tesla remained profitable in Q4 despite factors like reduction of the company's average selling price and the cost of the Cybertruck ramp. Also, Tesla beat most automakers by 10 to 15%. Still, Tesla posted revenues of $25.17 billion and an 8.2% operating margins in Q4 of 2023. We forget about some of the details in 2023. Tesla highlighted several details in its Q4 and fiscal year 2024 update letter. For one, the company emphasizes that the Model Y became the world's best-selling car with 1.2 million units sold in 2023. Tesla Energy also had a breakthrough year with energy generation and storage profits almost quadrupling in 2023. These are Tesla shareholder highlights of the earnings. Our global production reaching a record level in Q4, achieving a nearly 2 million annualized run rate. At Giga Texas, we delivered the first Cybertruck to customers with production and deliveries expected to ramp throughout this year. In addition, we continue to make progress in our next generation platform. We also started rolling out FSD Beta V12, which is utilizing end-to-end training to select Tesla employees and customers and unveiled the second generation of Optimus the robot. Both FSD and Optimus are trained with similar technologies, pillars, real-world data, neural net training, and cutting-edge hardware and software. Energy deployment increased to 15.7 gigawatt hours in 2023, a 125% increase compared with 2022. In Europe, the Model Y was the best-selling vehicle of any kind for the full year. Huge thanks to European owners. And if you like this kind of content, please like, subscribe, and turn on notifications so you won't miss any updates. Tesla warned of notable slower growth in 2024, and its profit margin took a hit in the fourth quarter, signaling more uncertainty ahead for the world's most valuable automaker and the broader electric vehicle industry. CEO Elon Musk also reiterated his desire for greater control over the EV company, saying he wants enough to have strong influence and deter activist shareholders. Musk owns currently 13% of the company and is the largest shareholder. Tesla cautioned that growth is likely to come in lower in 2024 than it did last year without specifying a target. Elon actually said it depends on the interest rates. He said he doesn't have a crystal ball. He couldn't give any specific number because no one knows what the Federal Reserve is going to do. In 2023, its global deliveries increased 38% over the prior year, and for several years Tesla had been aiming for 50% annual growth on average. Tesla is currently between two major growth waves, Musk said, adding that the company is far along on what he describes the next generation low-cost vehicle. Elon expects Tesla to begin producing the lower-cost Model 2 at Giga Texas towards the end of 2025.
Melissa, this was the most sobering outlook that I have seen from Tesla when they talk about a step down, a notable step down in growth rates. I just want to put that in perspective. The street was looking for 19% revenue growth in 2024 for this year, and they said it'll be notably lower than that. So it probably comes in at 10%. When I see that, I think stock's down 5-10%. That was my initial reaction. I'm surprised to see where it is. The reason why I believe it's holding in is twofold. You highlighted the importance of the gross margin X credits. I would just add to that, that's the first time in a year that we've seen that improve. And so that is a surprise on the positive side, especially given the ramp of Cybertruck, some of that investment. And second, I think the stock reaction speaks to the conviction of shareholder investor base. And effectively, this comes down to a very simple question is, do you believe that EVs are the future? And if the answer is no, that you think that this is going to take 20 years to get to electrification and autonomy, then you believe the stock should be down measurably, meaningfully, 10% more on this news. But if you do believe in the future, then this punky, soft guidance that they're giving for this year is going to ultimately prove to be noise, because everything that Tesla's doing, building out this next generation vehicle platform, everything that they've done in their investments in autonomy, all of that is coming at a time where traditional auto is stepping back from these. And so that's the question. If you believe in electrification and autonomy, Tesla's actually in a better position longer term. And I think that the reaction to shares speaks to the conviction, long-term conviction that Tesla shareholders have.
Earlier Wednesday, Reuters reported that Tesla has told suppliers that it wanted to start production of the new mass-market EV in mid-2025, and the model was described as a compact crossover. For the fourth quarter, Tesla net income more than doubled to $7.9 billion, largely due to a one-time tax benefit. The company's income from operations was down 47% from the prior year period, and its fourth quarter revenue came in shy of analysts' expectations. Adjusted earnings per share, 71 cents for the fourth quarter, also missed Wall Street estimates. Tesla said cost related to ramping up production of the new Cybertruck dented profitability, along with expenses for research and development projects, including those involving artificial intelligence. Recent price cuts also took a toll, with Tesla saying vehicles sold for less than average in the fourth quarter than had the year prior. Its operating margin improved slightly quarter over quarter to 8.2% for the final 3 months of the year. Still, that figure was down from 16% in the fourth quarter of 2022. Tesla's valuation has long been underpinned by its sales momentum and Musk's promises to transform the car maker into a leader in robotics and artificial intelligence. Tesla has also confronted other challenges in recent weeks. Hertz disclosed this month that it was selling 1/3 of its EV fleet. Also, Chinese BYD overtook Tesla in the fourth quarter to become the world's top seller of EVs for the first time. Musk said in Tesla's earnings call, if there are no trade barriers established, they will pretty much demolish most other car companies in the world. And that's pretty much what the financial media is milking right now.
The auto gross margins, excluding credits, at 17.1% was better than expected and represented a sequential increase. Your thoughts?
Yeah, I do think, it's important to note gross margins, automotive gross margins, ex credits did tick up. And I'd say, broadly, the picture here is the future is really electric vehicles, right? We already know that. Other traditional auto manufacturers are actually cutting back on their electric vehicle plans and programs over the next 5 years. And they're not as profitable on those platforms as Tesla is, because Tesla's still the leader in EVs. I'll also say that for the future, we're very excited that Tesla is investing in AI, that they're focusing on the next generation vehicle platform, because we think that robo-taxis, that autonomous driving is completely going to change Tesla's business model. I think that could push overall gross margins up to north of 50% over the next 5 years. And I'm looking forward to hearing more about that on the call.
Okay, and I've heard you talk about that as well. We've heard him talk about that. Steve, I want to get your thoughts on some of the commentary we've seen in this release actually about AI. And specifically, it says here that while they continue to execute on innovations to reduce the cost of manufacturing and operations over time, they do expect hardware-related profits to be accompanied by an acceleration of AI, software, and fleet-based profits. Is this something we've been hearing along the way too, or does this represent a ramp up in the rhetoric on AI?
Well, I think it's just part of Tesla's story. And look, Q4 results are a tale of two cities. Tesla posted record $25.7 billion in Q4 revenue. It's going to be roughly $97 billion for the year, and they sold 1.8 million cars. That's whopping 55% of the U.S. auto market. That's not a bad year. But the big picture is growth has slowed from 51% year over year last year, 19% year over year this year. So the big story is BYD is coming on quickly. They will likely pass Tesla next year as the dominant EV seller in the world. So right now, Tesla is still number one, but they're going to have to find a higher gear to stay on top. The AI story is part of bringing costs down. The robo story is another part. And there's also Tesla's rapidly growing energy division. So these are all part of the picture that investors are going to have to keep an eye on. But get ready to see the big smackdown, Tesla versus BYD for global dominance in the EV sector.
Now, as it appears in the news, Tesla's Q4 adjusted EPS 71 cents misses the estimate of 74 cents. Sales of $25.17 billion misses estimates of $25.62 billion. Tesla's Q4 operating margins 8.2%, down 784 basis points year over year. Tesla says we have sufficient liquidity to fund our product roadmap, long-term capacity expansion plans, and other expenses. Furthermore, we will manage the business such that we maintain a strong balance sheet during the uncertain period while we continue to execute on innovations to reduce the cost of manufacturing and operations. Over time, we expect our hardware-related profits to be accompanied by acceleration of EI. Software and fleet-based profit. Tesla Q4 non-GAAP EPS falls, revenue rises. Tesla reported Q4 diluted non-GAAP earnings per share of 71 cents, down from $1.19 per share last year. Analysts polled by Capital IQ expected 74 cents. Revenue was $25.17 billion, up from the year earlier. Analysts surveyed by Capital IQ expected $25.76 billion. Tesla's Q4 EPS $4.30. Tesla energy storage deployment in Q4 3.2 gigawatt hours. Tesla said growth rate may be down due to work of the Tesla team on the launch of the next generation vehicle at Giga Texas. Musk also said that the next manufacturing location for the next generation vehicle will be Mexico, probably after Texas starting in 2025. I think Musk wants to keep Wall Street expectations lower, which will be easier to beat in 2024. What do you think? You can leave your comment down below. So what else happened last week? Well, Tesla opened its first store in Chile. The EV maker has chosen a spot in Santiago, Chile. Bloomberg reported. Chile's Car Association reported that electric vehicle sales constituted just 2.5% of overall vehicle sales in the nation during the initial 9 months of the year. In September, the company officially registered the name Tesla Chile SPA, enabling it to engage in various activities, including car sales, manufacturing, and those associated with energy and electricity generation. Thank you so much for being here. And if you would like to see what happened with Tesla in January already, you can watch this video next. So anyway, thank you so much. My name is Claudia. I will see you next time. Goodbye.